What is up, guys? This is Cryptogrithm here, and today I'm going to show you guys how to trade order blocks and how to avoid failed breakouts and breakdowns by confirmations. So the way that I'm going to teach you guys how to trade order blocks is not found anywhere because I actually came up with this method by myself, and it's a little bit more advanced than what you'll find online, but it works for me and hopefully it'll work for you guys too. So let's start out with what's an order block, right? So an order block is basically just a complex support and resistance level where there's large supply or large demand. So basically when you're trading, right? So when you're trading, say the price is going up and then it consolidates downwards or pullbacks, goes up again, and then consolidates and goes up and then goes back down. Say these are just like wave 1, 2, 3, 4, 5, and then like some ABC correction. And then basically this is your basic bullet structure of 5 waves. And when you're trading, what you're targeting is buying support and resistance levels, right? You always want to buy support and short resistance, or buy support and sell resistance, whichever way you trade, depends on the type of trader that you are. So here are the support levels, right here. Let me draw it with a line actually. So here are the supports, and then here are the resistances, right here. These are resistances. So if the price were to go back to these levels, where would you guys buy? That's the question I want to ask, guys. Where would you guys buy and where would you guys sell if prices were to fluctuate and then go back down to these previous levels? And the answer is actually very complex because in the real market compared to the ideal market, it's not always going to be the same, right? So in the ideal market, what you would do is buy whenever it hits support, right? Whenever you hit the support, or cover if you're shorting. But this is basically whenever you would buy, is whenever we hit these levels again. And in the real market, that just doesn't happen. Usually in the real market, we usually don't hit these support levels exactly. Sometimes we might actually like undershoot below this level and then go back up. Or sometimes we might actually miss this level. We might actually miss this level and not touch this support level before going back up and continuing the trend. And for the resistance side, we sometimes don't even hit the resistance. So if you're going long, and let me expand this little chart a little bit. So say we're trending, and then say you longed here, right? You longed here off the support, and say that it did hit this level and you bought here. Where are you going to sell? Well, you're either going to sell here at the previous support or previous resistance, because when a support is broken, it turns into resistance, right? If you've read like Baby Pips or any traditional textbook, this is where you would sell, right? So say my sell target is here, but in the real world, since everybody is using the same method of trading, our target usually will not hit this level. Our sell target will usually not hit this level, and what will end up happening is that you're going to be holding onto a long position, and you're going to miss your target. You're going to hold onto a long position, and then it misses your target. So say misses your target, and then continues back down, and then you're just like, oh fuck, my sell didn't hit. I was green, but then like now I'm red because my sells didn't hit. I got greedy, and the price went below my buy entry. And this is what fucks up a lot of traders. This is the reason why a lot of traders lose money, is because they get greedy and they don't take profits when they have to. And it's not your fault. If you're that kind of trader, it's not their fault, right? Because you don't know any better. You haven't been in the market long enough, and you don't understand that trading is actually like a competition. It's actually a game of chess against other traders. Your goal is to make other traders lose money, right? Because in order for you to win, someone else has to lose. So your profits are actually someone else's losses. So what's gonna happen is the smart traders are gonna take profits early, right? they're gonna take profits early, and they're gonna sell before you do, because you know the first person that gets out is gonna win no matter what, right? If a person's making profits and he bought over here, he's always gonna be profitable, right? Meanwhile, since you're greedy, you're waiting for your target to hit, and there's all of this supply over here. Let me change colors. Right? There's all of this supply right here, right? That other people are looking to sell as well, right? So if everybody's looking to sell at this level, what are the chances that you're going to hit this level, get your sell at this level as well? Well, the odds are is that, you know, first in, first out, right? So the odds are that if everybody's targeting that level, there's going to be so much supply here that you won't hit this level because everybody's trying to get out the same price that you are. So in order for you to win, you have to get out before any other trader do. So that's actually my number one rule of trading, is to not be greedy. And that's actually what's going to make you a profitable trader, is to take profits and always set your stops when you're in profits. So enough bantering. I probably went on a little bit too long there, but let me show you guys how to find order blocks. Well, actually, let me explain order blocks like a little bit better. So an order block, let me clear this actually. So an order block. So let's say the price goes up and then consolidates a little bit, and then it goes down, and then goes back up again, consolidates, and then it goes down, right? And say that you actually bought here, and before this is like, I don't know, it doesn't matter what the trend is. It doesn't matter what the trend is here. And then this is like the support level of here, it goes up and then goes back down, and then you actually buy over here. It doesn't matter what this is. It's just noise. But basically, an order block is just like a range. It's just a range of where you're looking to sell, where traders are looking to sell. And another word for an order block is actually like a liquidity pool, but not exactly, because a liquidity pool is actually a little bit more broader. It covers more than order blocks. I mean, an order block is a part of a liquidity pool, but a liquidity pool is not an order block. So it's basically where a bunch of traders are looking to get in or get out, right? And usually when we reach these levels, we tend to range a little bit. We tend to range a little bit, like over here, or over here at resistance, or when we're about to break this resistance here, we tend to range it a little bit, and sometimes we might even fail. Hold on, I lost my train of thought. Let's see. Yeah, so let's say, hold on. All right, so sorry if this isn't a little bit clear. I'm trying to explain the best I can, but it's just so much information to teach you guys at one time that it's a lot to put in together at once. So I apologize for that. But okay, so back on topic. So let's say this was your buy right over here. You bought over here, and then you're looking to sell. I don't know. You don't have a target. Let's just say you're looking to sell here because there was like a previous uptrend before all of this stuff. Like there was an uptrend, and then there's like some resistance here. I don't have space to expand this towards the left, and I don't know how. But anyways, damn. Okay, yeah. So ignore that. So, anyways, let's just say that this is where you bought, and this is where you're looking to sell. And usually what will happen over here, when you're looking to hit your sell target, is that we either undershoot and then miss your target, or consolidate a little bit and then miss your target and then go back down. This is where you'll lose money because you got greedy and you're waiting too long for your target to hit. Or what will happen is we overshoot and consolidate a little bit, and then you sell here and then you take profits, but then you're like, oh wait, it broke resistance, right? Because you just sold at this resistance, and then we broke above it, and we overshot above this level over here, where you sold, and then you're just like, oh, it broke resistance. I want to get back in. I don't want to miss out. I'm gonna FOMO back in, and then you end up buying over here where the resistance broke. You end up buying over here. And what a lot of traders don't understand is that in the real world, when there's like a lot of FOMO in the air, and when there's a lot of people trading at once, support and resistance level are not going to act ideal. It's not always going to get rejected at resistance. It's not always going to bounce off support. It can either go under support and undershoot or overshoot. Let's see. Actually, since I'm explaining resistance here, let's talk about resistance. So in the case of resistances, we can actually overshoot the resistance. We can actually overshoot the resistance here, right? We can either actually overshoot the resistance and then break above this level and then go back down. And this is actually where you would get fucked, because you sold here, but then you saw that it broke above, but then it consolidated a little bit and then dumped back down. You're just like, oh shit, I should have never bought back in. And the cause of this over here, the cause of this overshoot was because of FOMO, right? A lot of people thought this was going to break out, but this is actually a failed breakout. And another case is that it can undershoot. And I explained this a little bit earlier, but it can undershoot, and then you miss your target and it goes back down, and you're just like, oh fuck, I didn't take profits. I missed my target and I didn't take profits. So you're just like, oh shit, you know, it can overshoot or undershoot. And a lot of people don't understand that. And the reason they don't understand that is because they don't understand the concept of order blocks. I'm gonna explain the support case now. Yeah, I'm gonna explain the support case now, because I just explained the resistance. So let me explain the support case to make it a little bit more clear, in case you didn't get this concept that I just explained. So okay. So say the price is, I don't know, you have some consolidation here, and there's like some downtrend, and then it goes back up, and then consolidates a little bit, and then goes back up, and then we undershoot below this, right? And let's say you bought over here, right? You bought over here at this support level because you saw that there was support over here, and then, you know, you just decided to buy because it was nearing the support level. Actually, since you don't know about order blocks, let me redraw this. Let's just say this is the ideal case, which will likely not happen, but we fall back down to the same price level over here, right? This is the support, this is the low over here, and you bought over here. Yeah, you bought over here because this was the previous support, and now you're looking to sell at the previous resistance, which was over here, right? So over here, this would actually be your target, and then yeah, this would be your target, and then you end up shorting over here. I think I just confused myself a little bit. I was explaining the wrong thing. Anyways, back on topic. Say you shorted over here. Yeah, totally ignore this long position here. I fucked up on that, but let's say this was the previous resistance, and then say you shorted over here because this was where the resistance was, right? And say you shorted there, and then you were looking to cover. So where would you cover? Hold on. So where would you cover? So where you would cover would be the previous support level over here. And then in this case, we actually undershoot, and we do not hit your cover, right? Because we don't hit this level over here. We don't hit this price over here, and then you miss your cover because this didn't go below, or this didn't hit the previous price level, and this is where you get fucked again because you got greedy and you know the price went up, and then you're just like, oh shit, it's gonna go back down eventually, right? I mean, you're still green, you know, you're still comfortable, you're not losing money yet, but then all of a sudden the price shoots up and then never goes back down to this previous support level, and then you miss your cover and then you lose money. So that's one case of the order block support. The other case is when the order block support overshoots and then goes under, and then you do hit your cover. You're just like, yay, I made money. Hold on. Yeah, you're just like, yay, I made money, and then you decide to reshort, right? Yeah, you decide to reshort. And the reason why is because, you know, this broke support, right? In the ideal case of trading, when support breaks, you would short it, right? And this is what you do. You short it here, and it consolidates a little bit, and you're just like, yeah, it broke support. It has to go down lower, but you don't understand the concept of order blocks. And then the price moves upwards, and then you get fucked on your short. Sorry, that was probably a little bit confusing. So I'm actually gonna show you guys some real examples with the Bitcoin over here that I actually went back and looked for. So how do you find order blocks? I'm gonna combine two main points here: how to find order blocks. Actually, no, I'm just gonna explain how to find order blocks first, and then I will teach you guys how to trade order blocks. So how to find order blocks, and let's start with resistance order blocks. So basically, you look for fractals when you're trading order blocks. It doesn't have to be a perfect fractal. In case you don't know what a fractal is, a fractal is a five candle pattern. So in the case of a support fractal, you get something like this, where you get lower lows, and then here's like the pivot point of the fractal, and then you get higher lows after this pivot point. And in case of the resistance fractal, you end up getting higher highs, and then followed by lower highs. So this is the resistance fractal, this is the support fractal. And then these are candlestick patterns, by the way, so there's like a bunch of lines over here, and then some kind of pattern. Say there's like an inverted head and shoulder, and then this is just like some regular head and shoulder. But anyways, in the case of order blocks, what you want to look for is fractals, but it doesn't have to be perfect fractals. It doesn't have to be like the 5 candlestick pattern. It just has to be like a pivot point. And this is actually very easy to spot when looking for order blocks. I could go in detail and pair it with VPVR, a volume price indicator, or volume profile indicator, but that's just gonna be like a different video because it becomes more advanced when you start using this. So what I want you to focus on is basically just these candlesticks, right? So we have an order block over here. Let me find my pen tool. And again, a lot of people use different methods in finding order block, and this is the way that I use it because this is what worked for me, and I modified like the main method of the way that many other people use order blocks. So the way I'm teaching you is like not from like the textbook or anything. It's just the way that I used it and the way that I've developed the use of order blocks. So yeah. So here's a resistance order block, and as you can tell, the price. So we found the order block over here, and this is basically like the fractal-ish pattern-ish. You can see that the price goes back down and then goes back up, and you can tell that it doesn't break above this resistance level over here, right? This high over here, as I explained back when I was doing this drawing on this ugly whiteboard. And if you were long, say that you bought over here, you would look to sell over here, right? But in this case, you would get fucked because it actually undershot where the resistance level was, which is where your target for your short was. And you're just like, oh shit, you know, I lost money because I got greedy again. But since you know how to find order blocks now, what you do is basically you just find the fractal, like kind of like the fractal pattern, and look at where like the pivot points are, right? And this is like the pivot point where we have a low right here up to this high candle. And you can tell that we get rejected over here. And actually, I'm gonna have to teach you guys part of main point 3 too, because in order for an order block to be valid, it has to have confirmation. So I'm gonna combine two concepts in one because I think this will make more sense. But yeah, okay. So basically, when you in this price action over here, you can tell that we got rejected in this order block that I've drew, this red order block over here, right? So say you longed over here and then you hit this order block, or no, you don't long right here yet because you're waiting for confirmation because you're smart. So you can tell that this order block got rejected over here. The price went down, then went back up. And this is the confirmation here. You can tell that it got rejected off this order block that you drew before all of this shit was drawn, right? You can tell that it got rejected over here. So this is a valid order block. And what you would do is that you're looking for a short now. You're looking for a short now. And you're asking yourself, where do I short? You know? Like, I got rejected over here. But since, like, this is the previous order block over here, I got rejected over here. Is the price going to go back up to this high if I got rejected over here in this order block? And the answer is likely no. You're not gonna retest this level until like way later. If you're looking for a short position, this will likely like break above the order block on the third test. So this is what I do differently than other traders who use order blocks, is that I redraw the order blocks when there's confirmation. So first I draw the order block, so I'm gonna delete this. So step 1, draw the order block. So basically I'm just looking for like the fractal-ish pattern where there's like a lot of resistance. So the candlesticks would actually look like this, and then there'll be no data here on the right. And I can tell that this is an order block because we got rejected over here. So we just have like some pattern, some uptrend, and then I see that, oh, we're starting to form a downtrend. Like we got a huge dump here, and we went back up, and then we got rejected, and then went back down. So this is a valid order block that I've drew with this point, with this low up to this high. And in order to tell if this order block is valid, is I look for a rejection when it hits this red box that I drew. And then now I have to find how do I trade this order block. And a lot of traders make this mistake of trading order blocks by waiting till it breaks, by waiting till it hits this level again. And usually by the time it hits this level, you won't really get a good short because the more, well, since an order block is just like a bunch of, it's supply, a resistance order block is a bunch of supply where a bunch of traders are looking to sell. The chances of being able to short this on the third test of the order block is likely not going to give you a good return, a good investment, a good R&R. So what I do is I redraw the order blocks. So here we have an order block confirmation, right? The price goes up, goes back down, retests, trying to attempt to break above this high. But you know, we have an order block here. So in order to trade this, I redraw the order block. So I delete this order block. Actually, I leave this order block here, but then I draw another order block. This is a secondary order block. So the red order block is a primary order block. And then this blue one, let's make it blue. This blue order block, the secondary order block, is where I would short. And this is what a lot of traders don't know, is how to draw the secondary order block. And this is where I would short, because you know the price failed to break above the red order block, and then you know when the price falls back down, it's going to retest the secondary order block over here. As you can see, when we fall back down and then retest this blue level, this blue order block, and this would be a perfect short entry. As you can see here, if you short it over here, you have all this downside from 2000, like 2600, all the way down to 1800. That's like an almost like 40-50% return. That's like a 40% return, and that is how you trade order blocks in the resistance level. And I could explain more examples, like over here. Here's like the primary order block. This is the same example as the previous one, but I'm gonna explain it again, or I'm just gonna explain this example again for more clarity. So you can skip the video and wait, or just fucking watch it. So here's the primary order block. I want to find the secondary order block, and how do I find the secondary order block? Well, we have the downtrend here, followed by the failed order block test, and then a huge, oh wait, no. Yeah, and then a dump. So this confirms this resistance order block. So how do I draw the secondary order block is I find where it got rejected here at this. And actually this is actually a terrible example. Yeah, so this is the secondary order block, and we did get rejected here. If I were to short here, and then I could have covered over here. I mean, that's like a scalp actually. That's like a 300-point scalp. But as you can see, this order block acted as resistance at the secondary order block. And the secondary order block is what you want to trade. The primary order block is what you want to use as confirmation. And then, oh, okay, this one's a support order block. So this is a support example. So here we have the primary order block, and I drew this already. Yeah, I think this one kind of explains itself actually. So originally this was a resistance order block, and then it never actually broke down. So the price was trending upwards, and then it went back down, and then went back up again, but it actually broke above this order block, and then it never broke down. So we actually never got a test of resistance on this order block. So this actually became a support order block. And in the case of a support order block, you basically just long on the primary order block because you never got a pullback, right? You never got a rejection. You got a pullback. You never got a rejection. So you would actually long at the primary order block over here whenever it hit this green box. And as you can see, when we rolls all the way up, you could have actually, you know, waited till it retested this order block over here at this confirmation on this dump attempt, which actually held. So you could have actually bought at this support order block level over here. And this would have actually been a great entry because you could have rolled this all the way up to 20K on, yeah, way up here. So yeah, this is a good example of a support order block. Let's see if I have any more examples drawn. Right here. So, okay, so this is probably not the best example. But actually, no, this is a good example of a overshooting support order block, right? So here I drew the primary order block over here, and then we retested this order block and then bounced off of it and then dumped. So right now I'm thinking, since we actually held here, so say this price action like all the way here, this never happened, and say there's no candlesticks over here. Say that I saw that this held at this order block, this primary order block held, and I know that it held by this bounce over here. I'm going to be looking for a long position. So what I'm going to do is I'm going to draw my secondary order block over here. And this is actually where I would be looking to long. However, I would actually be looking to long at the bottom of this order block over here. And the reason why this is a good example and not a terrible example is because this is an example of a overshooting support order block, right? We broke below this secondary support order block level, and this is like the golden buy zone right here, because we broke below the support order block and we saw that it held previously. This is like, I would buy the fuck out of this right here, because we dipped below the secondary order block, but we're actually consolidating and holding. So this is a very good case, because if you look at this primary order block and if you expand it, it actually hasn't broken the primary order block. So this entire order block here is actually still valid. Yeah, this entire order block here is still valid. This whole thing right here. But if we break below this primary order block, then the secondary order block has been confirmed to fail. And you could trade either order blocks, primary order blocks or secondary order blocks. It's just that the primary order block has to have confirmation. Yeah, it just has to have confirmation. Yeah. Sorry, I was thinking for a little bit. But yeah, it just has to have confirmation. Let's go on to more examples. So here's another support order block with confirmation over here, right? We formed the primary order block. Here's the confirmation. So now we're going to draw the secondary order block again. And then boom. As you can see here, the secondary order block held the previous price over here. And what my target buy would be is the bottom of the secondary order block at 6,080. And if I kept on trading that over here, all the way over here, I could have bought over here and made profits, as you can see. Sorry if this is terrible, if I'm doing a bad job at explaining this. I could make another video, but maybe it might make sense for some of you guys. Should I go over these resistance order blocks levels? Yeah, this one's valid. So here we have the primary resistance order block, and I'm going to draw my secondary order block, which is here, right? This is my primary, and this is my secondary for this resistance order block, this entire thing right here. And since the price is not ideal, it won't always hit the resistance level over here. We always have to draw the secondary order block, which is this blue box right here that I drew. And I would be looking to short inside this blue region. So here the price went down and retested the red order block and went down again. So now I'm looking to short into this blue region over here, and I would be shorting over here. And then as you can see, this actually was a successful short, because you got all this downside back down to 6K all the way from 9K. That would have been a good trade. That's like a 30% gain. And this actually expands all the way over here, right? Let's just call this another primary order block. So this is another primary order block, this red box over here. And then what we're going to do again is we're going to draw the secondary order block. And sorry if this is repetitive, but I'm really trying to nail this into your guys' brain, is drawing the secondary order blocks. So the price went up and then went down. It went up and then went down. And then it retested this primary order block and then failed. So you have to find the secondary order block now. And in order to find the secondary order block, what you're going to do again is, find like the fractal like pattern, which is like this entire thing right here. And what you would be doing is shorting into this blue secondary order block again. And look at all of this return right here, this entire thing down, all the way back down onto this previous order block if you want to expand this. So I would actually be covering over here at 6K where this previous support order block is. So yeah, I think this is probably enough examples actually. This is a terrible example because this is not confirmed. This is not a confirmed example. But I mean, you could have used this as a target for this long over here. You could have used this primary order block as a take profit targets if you went long on this order block. Is you could have sold into this primary order block. I mean, you know, it doesn't matter which order block you trade, the primary or secondary, but secondary is if you want to be more aggressive and you don't want to miss out. And, you know, because a lot of times the price is going to undershoot because a lot of people are looking at the same price levels and they want to take profits, you know, at the same level you are. So what's going to happen is, you know, people are going to try to get out before you because, you know, they don't want to lose money, you know? Yeah. So I think I covered everything. I showed you guys, you know, basically what an order block is. An order block it's a complex support or resistance level. Showed you guys how to find order blocks. And, you know, in order to find it, you just look for these fractal-like patterns or pivot points. And it doesn't have to be like perfect as long as there's confirmation. Like as long as there's confirmation. So like here's like a fractal-ish pattern, you know. In order for this primary order block to be valid, it has to, you know, break below it and then retest it and then get denied. So I showed you guys how to find order blocks, and I also showed you guys how to trade order blocks by teaching you guys how to find the secondary order block, which is the order block of the rejection. You know, when the price goes down and then gets rejected. I fucked up. Where the price goes down and goes back up, gets rejected. So now I have to find, you know, the secondary order block and then short into it when it retests that blue zone over here. So that's how you trade an order block. That's how you trade the secondary order block. You could always use primary or secondary order blocks for your targets. It doesn't matter. But if you want to be more aggressive, you know, use the secondary order block because a lot of times people are looking at the same targets as you, and the price will often undershoot your target. So it's always good to take profits. And, you know, you could have used this secondary order block to take profits at this long over here. If you went long on this support order block, you could have used the previous secondary order block to take profits over here, and that would have gave you like the perfect exit. So yeah, I think I confused you guys a lot. I will make a follow-up video because this is like a lot to teach at once, and I don't think I really organize this lecture very well because I'm like trying to explain like probably like 100-page book of concept into like one video. But yeah, let me know in the comments below on anything that I confused you guys on, because I showed you guys a lot of examples, but I may have gone too fast or I may have done like a sloppy job explaining it. But yeah, leave the comments below and subscribe. And if you enjoyed it, hit the like button. And yeah, thank you. Today I showed you guys that the market is not always perfect. It's not always going to tap the exact resistance level. It's not always going to tap the exact support level. You know, in this case, you actually undershot and you would have missed your, you know, cover target over here if you were to short. Or if you were looking for a long, you would have actually missed this long target over here. So the market is not always going to tap the perfect support or resistance level. And I also showed you guys how to trade it. So yeah, thank you. How do I fucking stop this? Okay, yeah. Sorry, I actually never used this recorder before, but I wanted to record in 1080. Thank you.